Hi everyone, I'm Matt Clark, research analyst for Money and Markets, and this is your marijuana market update. Remember, you can check out the marijuana market update on our YouTube channel. Just go to youtube.com and search Money and Markets. Will be the one with the green logo you'll be able to see, and just click there. Don't forget to give us any feedback that you have. You can do that by emailing us at feedback@moneyandmarkets.com, or you can leave a comment below. Make sure you do that. Either way, we appreciate that. We get a lot of great feedback, and I really do appreciate that. But now it's time to get into this week's update. Today I want to talk about a bigger cannabis company that's been in the news quite a bit lately, at least in the last week or so. Chris sent me a comment on YouTube. He said, could you please talk about Aurora? A lot's happening with the company, a new CEO, big write-downs, and projected sales. Of course, Chris, love to. And thank you for the question, by the way, on YouTube. Aurora has been on my mind for the last couple weeks, and this recent sprout of news kind of gives me a good opportunity to discuss it. Some of the big news for this Canadian cannabis company included naming a new new CEO. Miguel Martin, the company's chief commercial officer, was recently elevated to the position. He replaced interim CEO Michael Singer, who is the company's executive chairman. Now, you remember the company parted ways with its old CEO about a quarter and a half ago after really, really bad earnings. So they brought in, they didn't really bring in any new blood. They just kind of elevated one person, which is kind of maybe a reason why investor sentiment on the stock has still remained fairly low. In fact, news after the new CEO announcement came out, investor sentiment really didn't help the stock any, as it actually fell about 4.5% since that announcement was made about a week and a half ago. Now, at the same time, the company also released its preliminary financials for the fourth quarter, which is its fourth quarter coming up on our third quarter. Now, its projected net revenue for the quarter is between about 70 million and 72 million in Canadian dollars. That's a 7% decline from the previous quarter. Its net revenues from cannabis alone is projected to be between 66 and 68 million Canadian dollars. That's a 5% drop from the previous quarter. It has cut about 35% of its sales, marketing, and administrative costs, which is good. But it's got a $1.4 billion U.S. write-down of goodwill and intangible assets, and it also terminated its partnership with the popular Ultimate Fighting Championship, or UFC. The company, Aurora Cannabis, will make a one-time payment of about $30 million to end that contract in Q1 of 2021. It's expected to save the company about $150 million in fees and other costs like marketing and research and things like that over the next 5 years. Perhaps the biggest issue for me is the write-down. Now, Aurora Cannabis continues to produce way more cannabis than it can sell, which creates an oversupply issue for the company. Now, remember, it's about supply and demand. And if you have an increase in supply, you want your demand to kind of follow suit with that. And in this instance, for Aurora Cannabis, it's not. And the company continues to oversupply and oversupply and oversupply. Its demand is staying pretty steady, if not actually falling a little bit. Now, the increase in cultivation was because the company had thought that its better strains would push illegal cannabis out, because there's still an illegal cannabis market in Canada and even here in the United States, in states where it's legal. But they were wrong. They were also wrong on their judgment that the rest of the legal cannabis market was not going to be as competitive with those better strains, but it actually is. The write-down pretty much suggests that Aurora is admitting their previous investments were pretty much off base. Now, Aurora's decline in net revenue only shows that the company continues to struggle turning a profit, which is problematic. Needless to say, there's a lot of red ink on Aurora's balance sheets. According to my research, the company has about a minus $1.06 billion in trailing 12-month income and negative $206 million in operating cash flow. And its stock has really suffered. It announced a 1-to-12 stock split. That's basically where if you own 12 shares, it would become just one. And its price has struggled. The goal of the stock split was to avoid being delisted after its shares dropped under a dollar per share earlier this year. Right after the split, Aurora shares topped out at about $17.40. It's now dropped about 60% since then, and that wasn't very long ago. That, in fact, was around May of this year, and the stock has dropped 60% since then. Now, remember, this is a company that once had a market cap of about $16 billion. Today, that market cap, $785.7 million. It's a pretty big fall from grace. Now, Aurora is expected to release its fourth quarter full year earnings on September 22nd. I suspect it will have just as much bad news as previous quarters have, and investors are going to be expecting that from what's been a very, very rough year for the company. The bottom line is, if you're really considering Aurora Cannabis as an investment, don't. There are just too many red flags for me at this point to make it a viable investment option. Now, I know there's going to be some sentiment to buy on a dip, and that's fine if that's your investment strategy. Unfortunately, I just don't know that this is the lowest that Aurora Cannabis is going to go. I think sagging fourth quarter and full year revenue are going to bring it down further. So I don't think if you're wanting to buy on a dip, that dip has even happened yet. Looking at chief investment strategist Adam Odell's Green Zone rating system, Aurora Cannabis ranks a 19 overall, meaning it is a stock with a very high risk, and about 81% of all other companies actually rank higher. It ranks a 2 on volatility, which means it is extremely volatile. And now, if you remember, stocks with the highest volatility will typically underperform and come with a really high unduly risk. It ranks a 12 on quality, which means that it's exposed to very high operational and financial risk as well. Now, I've said before, you have to include some fundamental analysis with cannabis stocks, just because it's a completely different kind of market. You can't compare Aurora with Amazon. It's just not a fair comparison. But when I look at fundamental analysis, like its financials, its trends, all of it suggests Aurora Cannabis is going in the wrong direction. And it's not one that I would recommend putting your money in right now. And it's going to have to go a long way before I would suggest doing the opposite. So bottom line is, not a company to invest in right now, and it could be a long time before it becomes one. Remember, we like to look at stocks that are already on an uptrend. Their momentum is already moving forward. And right now, Aurora Cannabis doesn't have that. In fact, their momentum is downtrending. So it's definitely one we want to stay away from. So really, when you think about buying the dip, that's really not something that we necessarily prescribe to with Adam's proprietary stock rating system. You know, we want to see stocks that are already moving forward, that have already pretty much have some sort of analysis that confirms the trend is strong. And right now, Aurora Cannabis does not have that and is pretty far from it. Excuse me. Now, I want to update you on some cannabis stocks I've covered in prior weeks, like I like to do every week. Last week, I told you about KushCo Holdings. It trades over the counter under KSHB. It's an American company that sells packaging, containers, and other items for the cannabis industry. Now, like Aurora, like I told you then, there are just too many red flags to make this an investment. And since my report last week, KSHB has actually dropped 15% in its share price. So if you took my recommendation and stayed away from it, good job, because it's still testing new lows, and I don't think it's done testing those lows yet. A couple weeks ago, I also mentioned Aphria Incorporated, trades under the NASDAQ ticker symbol APHA. I said I liked it, just not now. Well, the stock is now trading a bit sideways in that short amount of time, but it's still trying to build a little momentum. It's not there yet, so it's still not one to get into just yet, but I'll certainly keep you informed as to when it is. That's really about all for me this week. I appreciate you tuning in and listening to the Marijuana Market Update. Again, like I said before, I love the feedback that you give us on our YouTube channel and through email. Remember, the email address is in comments or questions or stocks you want to examine is feedback@moneyandmarkets.com. You can also comment below in our comment section, and I read those every day. So anytime you put something up there, I always read it. I always try to respond to it. I don't necessarily get to respond to all of them, but I try to respond to as many as I can. So keep those coming. I'd love to hear what you guys have to say. Don't forget, I asked you a question several weeks ago, and you guys have just come out like gangbusters in responding, and I appreciate that. I'm putting all those responses together, and the question I asked is why you invest in cannabis stocks. I really enjoy reading what you have to say. I like reading what your rationale is for wanting to get into cannabis stocks. I'm trying to put that together so my team and I can really better craft the content that we put out for you, so it kind of tailors what your needs are. So all that feedback is great, and I appreciate it. Keep it coming, and I love it. I'll try to talk more about some of those comments that I've received next week whenever we come out with the next Marijuana Market Update. So keep those coming, and I'll address some of those as we progress further. Don't forget, if you're interested in listening to the Marijuana Market Update before anyone else, just make sure you subscribe to our YouTube channel and then get alerted when a new update is released. You can do that by making sure you subscribe and then hit the notification bell that comes up so that you know there's a new video. The same goes for the Bull and the Bear podcast and our week ahead video that we put out every week as well. We usually post videos on YouTube and our podcast channel about a day or so before they actually hit moneyandmarkets.com. So if you subscribe, it's really a good way to get information first so that you can take any action you deem necessary immediately. Coming up this week, we're going to have more from on our Bull and the Bear podcast, as well as our Money and Markets week ahead. So make sure you stay tuned to both of those. Also, check out moneyandmarkets.com every day for new content that we put out that we hope provides safe and profitable investment information for you. So for now, I'm Matt Clark, research analyst for Money Markets and your host for the Bull and the Bear podcast. And until next time we speak, safe trading, everybody.